and welcome back. It's a good day. Let's go across to our expert then, and Abhishek Goenka, CEO, India Forex Advisors, now joins us in Mumbai studios with his sense on all of those currencies. Abhishek, hi, welcome to the show. Let's start with the Indian rupee first. And of course, the global cues have been doing their bit in strengthening the rupee, but what kind of a range are you working with for the rest of this week?
Hi Manisha, we have been bulls right from the time of March, April, and now we have actually moved into levels of 50 and today again breaching 49. I personally feel that we are still not out of the woods looking at the domestic and the international factors. We might see dips around 48, 60, 70 levels around because of the temporary buoyant scenario we have seen in the European markets and the recent advice and recent information that we have got from the Germany and all that. But I feel that the situation is much worse, and I think we are heading towards 50 half, 51 maybe in the next 2 to 3 months time, and any support that we get in the US dollar, very, very good levels to buy for the importers. The reason being, we want to focus on a very important point that, around $300 billion of FX reserves is what we have, around $300 billion equivalent debt is what we have, out of which short term around 43% of the debt is maturing next year, which is really bad news. Now, whenever this debt is maturing, that means we are going to have more and more scramble for dollars. And these debts consist of ECBs and FCCBs and NRI deposits, and I think that's going to be a bad situation for India. In terms of flows, which is again going to be the savior, I don't think the flows are coming in. The entire corporate INC is literally bleeding because of high interest rates and input cost. Despite the fact that we have seen the commodity prices going down, I don't see that the situation is improving. Very interesting thing that we are looking at the markets right now, that all the companies are actually rolling over their short-term debt by taking bias credit. All the companies that we are meeting are actually, heavily indebted in terms of interest rate burdens. And if the rupee goes to around 51 or 52, maybe in the next 3-4 months, it will be heavily positioned a very, very difficult manner.
Abhishek, you pointed out all the weak factors, bad factors that the markets may be looking at. But let's get in a word for the international markets as well. Euro is seeing a bit of a strength, 1.35 has regained. How do you see that one going forward?
Looking at again what is happening in 2011, I think a very similar situation happened in 2008. Though a lot of people are saying that situation is not so bad, but I think last time when in 2008 we were debating that the taxpayers' money is going to go in actually funding the banks and the institutions. This time probably the taxpayers' money is actually going to fund countries, and that's the question mark here. And the central bank, the ECB, and the joining 17 nations and Germany at the top is definitely not supporting them in terms of funding them. If you talk about the government angle, from the corporate earnings angle, if you look, companies like Siemens, which is largest in terms of market capitalization, is actually bringing in all the funds of around $500 billion that they had into ECBs. They no longer have trust to the French and the Italian banks out there. Talk about money markets and talk about the mutual funds out there or the sovereign funds. They are no longer investing in Greek debt, which is obscenely cheap in the current market prices. So definitely there is no investment per se that is happening, and there is no bailout which is happening. And whatever information, whatever news we are getting is very, very short term in nature. So looking at 2008 and comparing 2011, we saw a fall of 1.6 from 1.60 to around 1.18 in 2008, which is approximately 25-30% fall. In 2011, we have not seen a fall of more than 15% also. So I think we are headed towards a 1.25 in euro versus dollar. Though in terms of euro INR, I don't think there will be a steep fall because INR is also likely to go weak. But euro is very bad, and I think euro should be sold at every rally.
All right, that's a very, very bearish Abhishek Goenka in the studios today. Thank you so much for being here, Abhishek. So rupee may decline to 51.52, and as far as euro goes, look out for levels like 1.25 in coming couple of months. With that, completely out of time on Currency Call. Thank you for watching.